Let's decode all of that with Mr. Jayant Acharya. He's the Deputy MD at JSW Steel, and he's joining us to talk to us about what the sector dynamics are looking like. Mr. Acharya, hi, good afternoon. Thank you so much for making time for ET Now. Appreciate you joining us. First, I wanted to begin with JSW Steel itself. You just reported your, Q4 production numbers, and it was a record output this time around. But the question is, how's the demand momentum on the ground looking like at this point of time, and will it sustain in FY24 going forward, you believe?
Yeah. So, pleasure to be here, Anisha. Thank you very much for inviting me to the show. Yes, we had a very good production number last quarter. The production went up by 24%. The primary reason for these production movements is the ramp up of our capacity in Dolvi of the phase 2 expansion, the ramp up of our expansions in BPSL, some debottlenecking which we are doing at the other brownfield steel plants. We expect the momentum of the next year to continue because the full operation of Dolvi will be available to us. The BPSL ramp up of expansions will come in place. And we also see a stable operation in JISPL and our Ohio operations in US. So the next year also should be an upside on the production numbers.
What about steel prices internationally, domestically? Do you think the effect of Chinese demand has played out in a full way, especially for the domestic side?
Yeah, so post the Chinese opening up, post the COVID restrictions, there is an expectation that the Chinese demand will improve, and that has supported steel prices and commodity prices globally. We expect the Indian demand, the domestic demand, to be quite healthy as we go into the next year, primarily on the back of a healthy Capex spend by the government of India, and also an increasing trend in the Capex spend by the private sector. We see a good demand, a healthy momentum going into FY24.
Okay, healthy momentum. We would love to get more color on that, whether healthy momentum means double digit or not, Mr. Acharya. But nonetheless, even export volumes are expected to perk up, right? Because all those duty constraints, etc., have been removed now. So, what about the outlook on the export volumes?
Yeah, so just on the domestic side, the domestic growth, we saw a growth of about 12% in India in the last year, as we finished in March 23. We do expect, as per various estimates, a growth of close to 8% in FY24. As far as export volumes are concerned, post removal of export duty in November 22, we have seen a steady increase of exports from the country. And after 5 months of being a net importer, India has turned a net exporter in the month of March. Quarter 3 to quarter 4, our exports have gone up from 1.3 million to 2.3 million as a country, as India full exports.
Okay, and also wanted to get a bit of sense from you on the profitability, because as you pointed out, demand momentum is quite decent. Steel prices have inched up on one hand, and on the other hand, coal prices have come down substantially, and that forms a major part of your OPEX costs as well. All of this, points to the fact that the profitability for the companies are also expected to be a lot better in FY24. Would you concur?
So the coking coal prices, Anisha, actually, if you look at the last 10 years average, the coking coal prices have been in the range of $165 FOB Australia. If you look at the last year's average, it is $330, which is double of what it was in the last 10 years. So coking coal prices continue to remain elevated. In addition to that, if you look at the iron ore prices in the domestic market, because India uses more of domestic iron ore, the iron ore prices have also gone up, let's say, post-November, by almost 1,500 rupees per ton. So therefore, there is a pressure on the cost side. Having said that, steel prices have also gone up only post that, I would say post-January. It has reflected an increase internationally, and the same has been reflected in India. Going forward, I think steel prices will depend a lot on the supply-demand scenario, as well as on the prices of raw material and how the global steel prices move. So we would see India reflecting a movement of global steel prices going forward.
On the pricing front, but what about the profitability metrics, Mr. Acharya? Expecting a big improvement? I understand that when you compare it with the 10-year averages, it's still high, but at least FY24 versus FY23?
So I would say that the levers on next year, what we have is a volume growth. I think that will continue to be favorable for JSW Steel in FY24. As far as the EBITDA profitability levers are concerned, it will be difficult for me to comment or give you any specific color right now. But we'll be able to give you some color after our May results when we declare the annual results.
So, just when we talk about, the raw material prices coming down, coking coal, various others, you think it will limit the price hikes going ahead? Is that something which you're looking at, or you would look at the net EBITDA per ton number?
So the coking coal prices, as I said, have remained on the higher side. And we have seen some softening of the coking coal prices in the last 1 month. But since they are already far higher than the normal level, we do not expect that to impact steel prices materially. So I would say steel prices will remain range bound in the near future.
Also reports talking about how you have bagged an iron ore mine in Karnataka. You have also been a bidder when it comes to the coal mines as well. Could you talk to us about what kind of scale up is expected on account of that? How does the supply situation improve, and what kind of investments you'll be making in these?
So yes, we have been we have been the preferred bidder for 3 coal mines and 2 iron ore mines. So we are expecting our iron ore production to ramp up. In terms of investments, we are still working on the investment plans for all the 3 mines in the coal sector, as well as the 2 mines in the iron ore sector. However, going forward, we will continue to participate in all the mineral auctions which come up in the country. Our long-term strategy is to secure the raw material both for coking coal and iron ore, and therefore we would work on that strategy going forward. Currently, we are reaching close to 45 to 50% of iron ore from our own mines being supplied to the steel plants.
Mr. Acharya, the value-added product also contributes around 55% to the revenues, and that's been something which has been supporting the profitability. What's the outlook going forward? Is the focus more to increase the share of the value-added products as well?
Absolutely. So our aim is to see that the value-added and special products in our portfolio is always more than 50%. We continue to focus on that. We get in the best of technology to see that we get in products which are on the higher value spectrum, as well as replace imports of such products which are coming into India. So it helps us to diversify the product portfolio and as well as increase our value-added mix in the overall system. So we will continue to be over 50%. Currently, we are in excess of 55%, but we will continue to remain over 50% in the value-added and special product mix.
Sir, can you just talk to us about the market share gain opportunity, considering what's happening around the world with issues in Europe, which could lead to a lot of steel production, issues in Russia, various other places? You think this is one of the best times to gain market share for long term for Indian big steel players like you?
It certainly is. I think India is a natural exporter of steel because we have large reserves of iron ore. We have a good capacity of steel production and facilities which are the latest. So therefore, it makes natural sense for India to be an exporter and a big player in the international market. We see an opportunity in this with exports from China moderating to some extent, and also exports from Ukraine and Russia into the developed world moderating. So yes, we would see that as an opportunity, and now that export from India has opened up post removal of the export duty, we see that as an upside.
Given the fact you see this as an upside, JSW Steel, how is that looking at tapping into this opportunity? Because you had a Capex plan which was quite aggressive from 27 million ton to 37 million ton. Are you on track?
Yes, our capacity expansions from 27 million to 37 million tons is on track. We are expanding about 10 million tons in the next 2 years. And we would be giving some more colors with details on the projects during our May annual results meet.
Right. So also one more thing, we've spoken about the opportunity, the way, how things are looking at. But how would you categorize the Indian steel industry at this point of time for exports? Because, if we just rewind on a pre-COVID basis, every company, large, small, was struggling with debt, balance sheet issues, what's really happening, how things are moving in. So, whether profits are so high or not, is the balance sheet of Indian steel industry now there to focus, to expand, or, they can take some leverage so that, if they gain market share, they can actually make some investments. Is that a big change in the last 3 years?
Yeah, so I would say that the Indian steel industry is in a much healthier position today versus what it was in the last few years. And we see an opportunity for expanding the Indian steel capacities going forward. Up to 2030, the National Steel Vision anyway has laid out that 300 million tons of steel capacity, 250 million tons of production, and about 230 million tons of demand. So we see an expansion in India for meeting domestic demand, which will continue to happen. In addition to that, India will remain an exporter of steel for various products into the world. And we see that as an opportunity, and I particularly feel that in the next decade, India will be able to garner market share from countries like China, where they have taken, I would say, a considered step to reduce energy consuming exports, energy consuming production. So over a period of time, we will see China's steel production moderating and their exports also moderating, which would give an opportunity to the Indian steel industry to gain market share.
So if we talk about the longer term picture as far as steel prices are concerned, one could say that steel prices in the last 10 years are, because majority of the increase has come in the last 2 to 3 years, you think that there is a sharp increase. But when we look at the longer term picture over the last 10, 15 years, the price hike has only been slightly closer to inflation. You think that that is something which will continue 4-5% over the next 10 years? Again, it will follow inflation as far as pricing goes?
Yeah, so, last year, the pricing, the steel industry has seen a lot of volatility, primarily post the geopolitical tensions from February last year. The commodity prices peaked and so did steel prices. However, the steel prices corrected between April 22 to December 22 sharply. And even India saw a correction close to 30% here. Having said that, steel prices have stabilized on a positive note in the last quarter. We expect that the higher raw material prices will support steel prices at a particular level going forward. And I would say inflation plus, it's difficult to project or predict a particular number, but inflation plus possibilities in the steel sector is certainly visible, given the healthy demand situation which we see in the country in this coming decade.
Just before I let you go, wanted to get a sense on the supply side a bit more, because we understand from industry sources that train rake unavailability is a problem, as well as the fact that the new issue of the private wagons, etc., have been limited as well. How big an issue is that?
Yeah, so that's a good point, Anisha. I think we are facing issues on availability of railway wagons, especially for bulk raw material movement. Currently, we move about 110 million odd tons of bulk raw material across all locations, and out of that, 70% is through rail. So we would be doubling this volume going forward in the next 3 years as our capacities go up. Already, we are constrained with respect to the availability of rakes, especially in the eastern sector, especially on iron ore. And we have been engaging with the government to allow private participation in procurement of wagons, so that we are able to supplement as a private sector to the steel wagon availability overall to the bulk raw material side. We continue to engage in that, and we would be requiring support from the government to see that the private sector participation here is allowed till the rake situation improves in the country.
Sorry, let's hope for that. We'll let you go on that note. Really appreciate you joining us on ET Now today.